Hello and welcome everyone. Thanks for joining us today. Today we're going to be talking about carbon neutrality and the environment as it pertains to mining companies and the importance thereof. We're joined today by three people in the know. We've got Catherine Stretch, Vice President Corporate Affairs at Troilus Gold over in Quebec, Canada. We've got Alex Pernin, he is the CEO of Green Star Royalties, and we've also got Oliver Turner, Executive Vice President of Corporate Development at Karora Resources. Hello, everyone. How are you?
Hi, Matt.
Hello. Good. Why don't we start off? Each of you just introduce yourselves, if you don't mind, to everyone, and then I'm going to launch into some questions, if I may. Catherine, can you kick us off?
Sure. My name is Catherine Stretch. I'm the VP Corporate Affairs at Troilus Gold Corp. So part of my responsibility is overseeing our implementation of ESG policies at Troilus. We are an exploration and development stage company. We're working on the restart of the Troilus mine, which is in Northern Quebec. But we think this is a really interesting time for us to take advantage of all the new technologies and new thinking and incorporate carbon neutral policies into our redevelopment of the Troilus mine.
Alex Pernin, CEO of Star Royalties. We're a royalty and streaming company, and we're unique in that we invest in both precious metals and carbon offset projects. Green Star is our pure green subsidiary where we originate opportunities, meaning that our funding is what creates these carbon credits. And we originate them in the top jurisdictions, being Canada and the US. We've had two major developments recently. The first was a strategic investment by Agnico Eagle, who's not only a senior gold miner, but a global ESG leader. And the second was a fourfold expansion of our flagship regenerative agriculture carbon program.
Okay, and my name is Oliver Turner, the Executive Vice President of Karora Resources. We're a gold producer focused in Western Australia, where we're expanding gold production from roughly 100,000 ounces to 200,000 ounces by 2024. And very importantly, we are also one of the leading junior producers in the gold space with respect to carbon neutrality. We've partnered with a company called Invert Inc. that's helped us address our carbon footprint, and we are developing a path towards net zero emissions over the course of this year and next, which we'll be happy to update people on.
Fantastic. Thanks, guys. Look, I was originally going to make this whole panel session around answering the question, why is carbon neutrality important to mining, right? But I saw this piece by a CEO, a slightly frustrated CEO on social media going, we've spent an exorbitant amount of money and time and effort putting together an ESG plan to include, carbon neutrality, net zero carbon. We issued the report, not a flicker in the market. He was super irritated, it seemed. Why bother going through the pain of doing this if the market's not going to react, Catherine?
Yeah, I think it's more of a longer term thinking that you need that approach from senior management, from the board of directors on down. In our case with Troilus, we are working on restarting the mine. The mine operated for 14 years. Things have changed since it shut down in 2010. So as we look ahead, and we're working on the pre-feasibility now, it's coming out targeted for the middle of this year, we can start to incorporate steps into the design that will help us implement carbon neutrality, and that will have a long-term impact on the operation of the mine. So it's not just right now. It's not just looking for a blip on the market right now. We're looking ahead for potentially decades, and how this will impact not only our shareholders, but the stakeholders in the region, how the land gets used. All of these things will change the outcome for our investors, we think, over the long term, and make it a more attractive investment opportunity as well.
And Alex, what's your take on what Catherine said there? Given you're in the business of carbon credit pricing and carbon offsets.
I completely agree. I mean, this is something that we speak about every single day, mostly all day. 75% of our meetings, 80% of our meetings are carbon credits, carbon offsets. We get asked all the time, why carbon neutrality for companies and for investors? I think the reality is it's a combination of the environmental side and the finance side. And Matt, we've spoken about this in the past. From the environmental side, I hope that people recognize the importance of avoiding climate catastrophe, and we're seeing it now. It's personal, right? Where you're dealing with forest fires, uncontrollable forest fires. You're dealing with record heat waves every single year. You're dealing with 100-year flood events that are happening on an annual basis. So people want to prevent this from getting worse. In terms of the financial component, from the company side, we've always spoken about cost of capital, right? Getting access to capital. At the end of the day, if you're a public company, you're competing with other public companies to access capital. There's only so much capital in the market, and you're trying to compete with them. You want to be relevant. You want to attract the investors. You want to score well on ESG scorecards, because now there are mandates from investors that can only invest in ESG. So, I can appreciate the frustration of that CEO, but it's a long-term play. If you look at it from an investor's point of view, it's a mainstream topic. A couple of years ago, we weren't really focused on ESG to the level that we are now. Back then, it was also called CSR. But you think of what's happened in the last couple of years. We've had COVID, and COVID has been an exercise of identifying, quantifying, and minimizing risk. And climate is equally an issue. There's an entire exercise that's going on with the SEC, and we can talk about that later on. But the SEC is now requiring climate disclosures, and they want to be consistent. They want to have verified information. It's all about understanding the risk of climate change, your GHG or your greenhouse gas footprint, how you're going to address that. This is something that everybody's talking about, and it's becoming a requirement. So it's the right move for that company going forward.
Okay, so you've got ESG. You've talked about CSR in the past, but you've also talked about SEC. Maybe stepping things up and talking about climate disclosures. Is it the same as it used to be? Is ESG just a rebranding of what went before? What do you reckon, Oliver?
No, not at all. I think it's been cranked up a notch. And what I would say, first and foremost, I completely agree with Alex's statements. The evidence is now irrefutable in terms of the impacts of climate change and the risks to businesses in terms of their future profitability are enormous. So irrespective of whether you believe in that narrative or not, you need to be addressing this. Now, from the investor standpoint, when we kicked off our journey at Karora mid last year, there was a very large U.S. institution that began their work upon that announcement. So this is, to Catherine's point, this is a long-term game. This is something that takes out and plays out over time. All of our work on the ESG front culminated in the issuance of our inaugural ESG report, which we put out just 2 weeks ago, which was a fantastic group effort and the first time ever in this company and sort of a big sign of our maturity. But a lot of the work that went into that, we were there with funds over the course of the last 9 months, helping them understand our business from an ESG perspective and from a future risk perspective with respect to the impacts of climate change on our business. So that did translate into 2 major new buyers. So the point of what you're just talking about with the CEO you're addressing, they need to then take that work that's been done, get out there, talk to these funds, to Alex's point, walk them through the ESG rating mechanism, get them more familiar with the business. And then when we start to think of the world of mining versus the generalist investor capital out there, it completely dwarfs what we've seen in resource funds. So these funds do have the capability to make very large investments, but they take a long time to do their due diligence, and they need to make sure that you have a long-term plan in place. So it can translate, but you just need to use that information the right way and make sure that you walk through investors through your process.
Okay, so that's a real world example of a financial benefit, and I think something Alex alluded to as well. But Catherine, retail investors, they don't have that kind of view. They don't have the patience, it seems. What's the pushback that you're getting, and what would you say to those people?
I mean, I don't think we're getting any pushback right now. Obviously, we need to be thinking ahead towards the cost involved in building the Troilus mine. We're concerned about the CapEx, the OpEx as we build the economic model, and we want to make sure that it will work over the long term. But for us, we have, I think, a competitive advantage in that although we're in Northern Quebec, we're in an isolated region, we are actually connected to the hydro grid, to Hydro-Quebec. And so that gives us access to renewable power. So right away, we're a step ahead. I think it puts us at a unique advantage compared to some of our peers that may be at the same point and may not have access to the same sorts of renewable energy. So we've got that already. We're starting ahead of the pack. So now we thought, okay, well, let's take a look at how else we're using energy on site and what can we do. So we're using energy in vehicles, we're using energy in drilling, we use energy, electricity in the camp. How can we, as we expand and as we move into construction and then production, how can we incorporate means of new technologies that reduce our GHG emissions, and where we can't reduce the emissions, then look at offsets as an alternative. So we are working with Hydro-Quebec right now. We've got a substation on site, 50 megawatts. We have enough capacity to power the future operation. But if we start putting in new things, electric vehicles, we need stations to charge the electric vehicles. All these things are important design aspects that we can include right now that will have an impact and will make it more attractive to investors over time.
Well, let me stick with you, Catherine, okay? Because I want to try and understand, again, as it comes to my comments there, by another CEO is basically saying, look, this stuff's been around for a while. If you do good, you do good. And it's kind of horses for courses. There's no kind of standard footprint or template that you can follow. So do you have to, in some way, map your own course?
I do think so. Yes. I mean, this is a big controversy, and both of Alex and Oliver, I think, have touched on it. There was a fairly lengthy article in the Globe and Mail in Toronto this weekend about the lack of kind of standardization of reporting. So for a small company like us, we look at the landscape and we look at all these different reporting standards and think, oh, how are we going to do this? So there are various platforms and means, but we have to do what makes sense for us. We can't do everything right now. It's just not possible. So we have to do what we think is right. We have to watch the trends, watch what other people are doing. How can we incorporate this into how we are doing our business? But I do think that we will see more of a regulatory push, that we will start to see it come down from governments. We are already starting to see it from the financial regulators. So to be ahead of that curve a little bit, I think is important for a company like ours.
Okay, and Alex, if I look at you, it's a fairly nascent industry. The space that you're playing in, people are starting to, we're hearing, about carbon offset credits and and net zero and all of those wonderful phrases. People aren't quite sure what all of the above means, but how does a company like you, play that straight? Because there'll be people taking advantage of this. So what does good look like?
Yeah, that's right, Matt. So look, good looks like getting involved with the best projects out there. And we've spoken about carbon credits in the past. The point of carbon credits is to voluntarily, or sometimes actually on a mandatory basis, because there are those two markets. There's the compliance market that we've spoken about in Europe. We have a carbon tax here in Canada. So the companies that fall under that mandate, well, they are regulated by the government to offset their emissions. So if we actually go back to the original question of why do you have to do this? Sometimes you have no choice. You're forced to do this. But if you talk about it from a voluntary basis, the line is getting blurred between compliance and voluntary. When you're pressured by BlackRock and Van Eck and the retail investor and the 20-year-old investor that wants to support you, that's environmentally friendly, is it really that much of a voluntary situation? You're almost pressured to do it. So I think this whole voluntary mechanism is something that goes away later on. But in case of what we do, the whole point of carbon credits is to purchase them to offset your emissions. And like I said, you can do it voluntarily. You don't have to do it voluntarily. Sometimes you have to. But buying credits is a relatively easy thing. It's something that you should do. It's in your green toolbox. Kudos to Oliver that they've already done that in 2021. So it's something that you should be doing. But what we want to do is we want to take it one step further. We don't want to just be involved in existing credits. We want to originate them. And we've spoken about originating before. We want to bring in capital, and that's what this Agnico Legal partnership is all about. We want to bring in capital, and we want to originate the best quality deals and the best jurisdictions with the best types of opportunities. There are different types of opportunities that generate credits. We have been focused on nature-based solutions, and we can get into the details as to why we think nature-based is the right way to go. But at the end of the day, it's a combination of everything. There are credits that are involved with carbon removal, which are what nature-based means. You're removing carbon out of the atmosphere. There are also carbon avoidance, technologies like renewable or electrification that prevents emissions. You need both, and we can talk about analogies of both, but we're involved in the nature-based programs. We're dealing with First Nations and Indigenous communities in Canada with their conservation of forest efforts. That's gone very well from an ESG perspective, especially from the E and the S component of ESG. We're dealing with agriculture in the US. You look at the US, half of the surface area in the US is for agriculture. 10% of American emissions are agriculture related, which is all of what Canada emits. We're talking 600-700 million tons of CO2. So we want to get involved. We want to fund projects that are environmentally beneficial to the world, that generate these credits. And can be used for the companies on this panel, for the Agnicos, and for the rest of the industry.
Right. Okay. Again, we've had a lot of questions sent in about this. People are fascinated by this area because they struggle to understand what good looks like and what bad looks like. Because you see scenarios where, carbon offset companies, they go and buy up or option or lease a chunk of the rainforest somewhere and go, right, that is worth X dollars, right? A forest which was already there, trees which were already doing a job. You're talking about regeneration, reforestation. I like that in the agriculture community. I kind of like that, but you know what I mean? You can sort of see why there's a degree of skepticism. You can see why activists are slightly nervous about how this thing plays out, what real looks like, what its synthetic version looks like. I mean, is that something that you're coming up against in terms of questions you get, whether it be for institutions or retail?
It's a fair question, and we're spending most of our time educating large institutional clients, educating companies like Agnico. That was a fairly long process to educate them, to build that comfort, to really understand what they want to do with their strategy. And that's still in formulation mode. But the easy way to answer that is something called additionality. The project itself, would it have existed if it weren't for the carbon credit? So if you look at what we're doing with regenerative agriculture, if we're not funding these farmers to transition to a more sustainable way of farming, well, then there are no carbon credits. That's the whole business model. When you're dealing with First Nations or Indigenous communities like what we have in Ontario and in Alberta, they heavily rely on their forestry assets for income. They log these assets. These are logging operations. They clear cut them for income. And what we're doing is we are convincing them to actually conserve these forests and generate more revenue from the generation of these credits by conserving their forests and clear cutting them. That's additional. If we're not coming in to support that, there is no conservation, there are no carbon credits. There's obviously pushback in some of the examples that you're explaining, the rainforest in Brazil, and that's just an example. They're excellent projects there too. But you can't conserve a provincial park. We have Algonquin Park here in Ontario. It's a beautiful natural provincial park. You can't go and generate credits from something like that. So you really need to understand who is involved here. And we've spoken about that in the past as well. Who's developing the project? Is it a tier one developer? Is it a company that's done this before? Do they only have one project that they developed? You might be questioning that. Do they have 200 projects like Blue Source, our partner? Okay, then you're comfortable. That's kind of like the Barrick or the Newmont. Who's verifying all of this? Who's actually auditing this work? Is anybody actually auditing this work? And those are registries. And we've spoken about that in the past as well. You want to see these lead players getting involved. And now we're bringing in Agnico. So further endorsement of what we're doing, further validation of the business model. You want to see the big brand names involved. If you don't see that, it doesn't mean that the project isn't good quality, but you want to do some more digging to really understand what they're doing.
Do you buy that, Oliver?
Yeah, no, absolutely. And one of the key points that Alex touched on there in terms of additionality is important. Permanence is important. Durability of these credits is important too. So one of the things that we wanted to do at Karora for sure was make sure that we're approaching our offset selection with the right manner and with the right group, which is what we did with Invert. But also just to take this a step back, we realize you got to take a dual track approach, right? So as a mining company, we are large emitters. We're also a very necessary part of this whole solution in terms of electrification of the world and solving the ambitious climate targets that we have, or achieving them rather. So what we wanted to do was engage with a group that was able to do two things for us. Number one, help us design a decarbonization pathway. So that's using several of the technologies Catherine touched on some with her project there in Quebec. We are evaluating those right now. So at Higginsville, which is in Western Australia, for those of you unfamiliar with the story, it's a diesel generated power solution. So we literally have diesel gen sets right on site there. It's a remote mine. And that's an obvious target for us to reduce our greenhouse gas emissions. So we're looking at a variety of hybrid power solutions there, a mix of renewables, gas. So that's a project we're looking at right now. We're in the middle of a very large expansion. So we're looking at fleet replacement with electric vehicles. There are not 60-ton underground trucks yet. They're in development right now. 60-ton electric underground trucks yet. They're in development right now, and we're working very closely with OEMs in developing those. But that's going to be part of our future plan with fleet replacements. So we're also looking at fuel switching. So we're looking at a variety of technologies and approaches to first and foremost reduce what we're actually emitting as we produce our product. And then for what is called residual emissions that we cannot reduce via technology, we're looking for a long-term solution with carbon credit projects like what Alex is working on. So our first swing at this last year, we invested in some projects, particularly one called the Mount Sandy project, which was very important to Karora and its stakeholders. We all remember 2019. Alex mentioned the bushfires at the beginning of this call. Like Australia was on fire for months in 2019. Literally, the entire island nation was on fire. And so what we invested in there was a conservation and reforestation project there that was also focused on restoration of biodiversity. So one of the cool things about a lot of these credits is you want to check for the additionality, you want to check for permanence and durability, but they also have a lot of ancillary benefits. So for us, it was restoration of biodiversity. If you invest in projects around the world, a lot of them can have really fantastic impacts on the local communities as well in terms of labor, gender equality. So a lot of knock-on benefits that come under the category of the United Nations Sustainability Development Goals. So careful selection of your carbon credit projects. We're going to continue it again this year. We'll continue it again moving forward. And our strategy is going to be, as these reduction technologies take hold, we'll be offsetting less and less. But we need to be thinking, and if I sort of put a different hat on here and think about a financial risk standpoint here, we need to be incorporating a price of carbon into our business moving forward, right? This is not going away. Catherine mentioned, more regulatory pressure coming down the pipeline. She's absolutely right. Alex mentioned compliance versus voluntary. This is all going to become compliance-based. So if I'm a CFO and our CFO is looking at this right now, how do I ensure that my carbon price in the future is somewhat hedged, just like an input cost like we have in mining? So approaching this holistically and looking at these long-term credit opportunities, long-term project generation at the same time as reducing your carbon footprint is being a sound, financial planner. It's what investors want to see. It's quite frankly what we need to do with respect to the whole global situation. And you have this really cool knock-on benefits of being able to have a really important impact in the areas in which you operate, which is what we're doing as well.
Okay, so you mentioned the word compliance, regulation. I think you all have. That's been driven by your desire to appease the ESG badged funds. That's been driven by activists, NGOs around the world. So, Catherine, what's the role of activism in this? Is it welcome?
I think so. I mean, there's a voice for everybody at the table. There has to be. We're at a point in Troilus right now where we're starting our permitting process. So we've started some of our pre-consultations. So it's very interesting. Everybody has a seat at the table. Our First Nations partners, the local communities, NGOs, government. You want to hear everybody's concerns, and you see things from a different perspective. So I think it's important for them to be there. It can be a challenge sometimes for smaller companies to try and stay on top of those type of things. I know last year one of the big French funds sent out an ESG survey to all their investee companies, which touched on various things such as compensation and GHG emissions, various governance issues. And it was a bit difficult for some of the smaller companies to kind of gather this information. So I think we need to shift our perspective, think that this is necessary. We need to be doing this. We need to be monitoring it. And we need to be open to the input from external parties. They're all stakeholders. I think, one of the things we fight against is that mining does have a very negative image in general. People think it's a big polluter. It's causes a lot of environmental damage. I do think that has really shifted over the past 10 years. I think mining companies have become a lot more forward thinking about their impact on the environment, about their long-term impact on communities, the kind of traces they leave behind once the mine is gone. We see that the major producers, I think, all have targets for carbon neutrality by 2050 at this point. And some people find that surprising, even within the industry. I was speaking with some of our team, and we were talking about, well, the big companies are doing this. And it was a bit of a surprise to people, even within the mining industry. So it's sort of a situation where everybody needs to be on board. It's not just me as the person who looks after ESG in the company, the CEO, the board of directors, of the engineers, the geologists, everybody needs to have the same mindset that we need to be thinking this way. And it's not just for our investors, it's not just for our stakeholders, it's for everybody in the community who would be impacted by this over the long term.
But we talked about, a horses for courses approach to this, because not everyone's in the same location, doesn't have the same physical or geological setup. You've got a lot of hydro in Quebec. You've got a lot of support from various bodies and departments in the Quebec government too. So being judged using the same template for a small company can be frustrating. It can be costly. So how do you push back against some of these activists? Should you be pushing back, or should you be welcoming their voice?
I mean, for us, it hasn't been a major issue as yet. I mean, we engage regularly with the government and with the First Nations. It is a big focus for us. We have a very supportive local community. They do want to see us develop the mine, and they provide us with a lot of feedback and input. So it hasn't been a challenge for us so far.
Okay, Alex, what's your take on activism? Welcome or not?
Look, Catherine's completely right. I agree with everything she's saying. Activism is a positive if it's done in a productive way, right? You got to be able to work and understand what the ask is and make sure that it's a reasonable ask. Now, if we talk about these 2050 targets, for example, that's really the next generation's problem. And what we're trying to do here is bring that 2050 target to this decade, maybe 2025, and work with those types of groups, the Agnicos of the world, to make that reality. But look, we're talking about the next generation. We have to listen to who that is, right? When we're talking about activism, an easy example that I like to use, when I graduated university, I'm a geologist by training. Out of 10 students, 6 of us went in mining, maybe 2 in oil and gas, and then 2 in academia. Just before COVID, I went to the Mining Hall of Fame. I was invited by the university. I sat at that table. Every single student was studying environment. That's everybody's focus, right? That generation. So we need to keep in mind who we're talking to, who that audience is. When we talk about retail investors, many of our retail investors it's the younger audience. And the reality is that audience is who's going to be moving into money management in the future. So, I think it all plays together. I also think it's worthwhile talking about what carbon neutrality in 2050 actually means, right? So if you go back 30 years ago, in 1990, as a planet, we were emitting about 36 gigatons or 36 billion tons of carbon dioxide equivalent, so all the greenhouse gases. So we went from 36 gigatons to now, 30 years later, we're north of 50 gigatons. So that's a 40+% increase in the last 30 years. And now that we're comfortable with how we live, in the next 30 years, we have to take that 50 plus to zero. There's a lot to do, right? And in Canada, we just had our 2022 budget that came out. It talks about how, as a nation, we have to spend $125 to $140 billion a year, every year, to actually meet these 2050 targets, let alone bring them forward. And out of the 125 to 140 billion, 100 billion is missing. That's not accounted for. So there's a lot of work to do, right? If you think of it from an even bigger scale, McKinsey had this wonderful report that came out at the beginning of the year, and it spoke about what it would take at a global level. We're talking over $9 trillion US to reach net zero. And the reality is, going back to this whole next generation problem, it costs more to do nothing than to deal with this now and deal with the repercussions later on. So that's the reality. And that's why listening to that activism is a smart thing to do to make sure that we're in a decent position in 30 years from now.
Yeah, I totally agree. And one thing I would add on top of that as well is just the fact that a lot of the opportunities that we have today didn't necessarily make as much sense 15 years ago. So, from a cost perspective, a lot of technologies had advanced to the point where it is actually cheaper and more efficient to build a solar farm next to your operation than it is to, throw up an on-site power generation with diesel, right? So, while, activism, just the word itself often gets a bit of a bad rap, I think these, quite frankly, are just people that are pushing us towards decisions that we should already be making as businesses, because it actually makes more sense from a cost benefit analysis perspective perspective for sure. And the second thing is, absolutely right with what Alex said in terms of we have to be addressing this now, because eventually there is a point of no return. And no matter how much money we have to throw at this problem, there will be irreversible impacts, right? So addressing this now is really, really important. And one of the biggest waves of investment that we saw during COVID, right? And whether you were smiling or shaking your head at it with respect to where investor capital was going, with meme stocks and with a whole bunch of these things, is that younger generation. And if anything has been proven, it's been proven the fact that segment of the market is driving capital flows in and out of areas. And if they're pushing towards more environmentally conscious purchase choices, clothing, food sustainability, you want to make sure that as a business, you're capturing that audience and approaching it the right way. So I think all of this is going in the right direction at the same time.
Is it though, Oliver? Because the amount of times I get this wonderful phrase used on YouTube, you go woke, you go broke. How's Karora doing?
Yeah. I wouldn't say it's woke. I'd say it's the harsh reality of an entire island nation being on fire for 3 months. I don't think you need any stronger examples than what we're seeing in terms of climate patterns around the world. I think if you genuinely do look at the hard data, the reality is the world is changing before our very eyes. So you can have the incumbents that are just quite frankly disturbed that their way of life might be a little bit different moving forward, and then you have the next generation that's coming up, realizing that they do want to have a planet to live on with in the same sort of comfort level that the previous generation did. So I have absolutely no issue with that whatsoever, but I also don't think this is an either or. Kind of reiterate the same point, right? These technologies are there that allow us to make decisions that are going to make these businesses more profitable at the same time. We have ESG capital flows that are leading towards this sector. So if you want to get in front of the wave, like Catherine's talking about, and quite frankly, like we've done at Karora, you also get excellent share price returns at the same time. So a lot of these things are symbiotic. They don't have to be either or. We're now at this place where an investment in a green focused company is actually going to make you more money than an investment in alternative companies over the course of time. So it's a great place to be, and I don't think we have to be as contentious about all this stuff anymore.
And Catherine, what do you think? I notice that well, maybe you've all got this eco logo certification because I know you're all in Toronto, but obviously maybe Oliver being down in Australia with the projects you haven't. But those sorts of certification, programs or. Well, maybe not regulation just yet, but compliance, et cetera. I don't know whether that's internal, external compliance. All of this sort of monitoring and oversight that's going to come in here. Clearly, you've got a view as to the value of that, whether it's going to cost you more money to do that, and whether that's valuable to you or your shareholders is one thing. But what would you say to the group that Oliver has just described, which is you've kind of got this next generation coming through. They've got certain expectations and demands of how they want to live, where they want to live, an environment that they bring their own children up in. Mining is an important part of that. Everything that people use every day, the clothes on your back, the computer you're watching this through or listening to this through, it needs mining. So, and I come back to an earlier point with regards to activism does mining have to significantly up its game to win that younger audience over? What do you reckon, Catherine? Are you doing enough, or do you think that the fact you're regulated kind of covers your back, and that's good enough?
I think we can always do more. I think one issue the mining industry has perhaps is that we are doing quite a bit, but sometimes we don't communicate it that well. So you mentioned the eco logo, for example, in Quebec, it's a certification regarding your sustainable practices. So we were the first company to obtain it in Quebec. It's focused on exploration and development stage companies. The nice thing about it is it was manageable. We have support from the government of Quebec and the Explorers Association. What it helped us with was learning how to package what we were already doing better, to communicate it better, to assure our stakeholders that there was a third-party oversight of what we were doing, and to sort of organize our thoughts so we could think ahead. Okay, what do we need to start thinking about now? We need to put in place a couple of years from now. But in fact, as we went through the process, we did find we were doing a lot of it already. it just hadn't really occurred to us how to appropriately communicate that to people. So now we're doing that better, I think. So there's always room for improvement, I think, and we're sort of fortunate at Troilus because the mine did operate in the past, and now we're restarting it. We sort of have a bit of a do-over. So it's really interesting, actually, as we talk with, for example, our First Nations partners. A lot of them worked at the mine in the past. They can give us really valuable insights about what works and what didn't work in the past. And that helps us create a better project going forward. So all of these things help everybody and will make a more efficient, more productive project once it's up and running again.
Okay. No, that's interesting. I would love to just investigate the eco logo a bit more, because helping a company kind of reframe or tell the narrative better is one thing, but pushing it to be better, I guess that would be really interesting. And certainly, as part of the narrative to this younger audience coming through, they need to believe that mining is upping its game, that it is trying to be better, to produce the things which we unfortunately all of us can't do without, it seems, these days. Alex, I'm gonna leave you with the final word. I mean, what in terms of the carbon neutrality, in your case, carbon credit or carbon offset credits, is that going to be the way that companies get a nice cheap win?
Yeah, so I'd say yes, but not cheap. I think cheap kind of takes away from the point. I just want to touch base on a few points that Oliver made, some excellent points. Matt, we're talking about the next generation. We also have to think about the current generation and the previous one. Many people forget about this, but 40 years ago, we went through the same thing. In the mid-'80s, we had a climate crisis, and that was the depletion of the ozone layer. It's not really an issue now because it was dealt with 40 years ago. So in the mid-'80s, we were generating an abundance of CFCs, they're chlorofluorocarbons. You found them everywhere, refrigerators, air conditioning units, aerosols, and they were destroying the ozone layer. In 1987, there was the Montreal Protocol. Fast forward many years, we've got the Paris Protocol now, the Paris Agreement. But back then with this protocol, the planet came together to ban these chlorofluorocarbons, and the depletion of the ozone layer ceased, and now it's actually regenerating itself, it's rebuilding itself. So this was something that we've already done. We're just gonna have to do it again for a different problem. Another point I'd want to make too is the comment that both Catherine and Oliver made on both happening together, both types of projects. I think the good analogy I like to use here is the homeowner's worst nightmare, which is an overflowing bathtub. So imagine this bathtub that's overflowing. You got water that's coming over the edge, you have the tap that's on. Well, you need a sponge or a towel to remove the excess water or the excess carbon. These are the carbon removal projects that get all the water off the edge. You need the projects that turn off the tap, which avoid the emission of carbon in the first place. But at the end of the day, you still have a bathtub that's full of water. And that's where you get more sponges, more carbon removal, more nature-based projects to actually get that water out. So even in a world where we are fully transitioned to carbon neutrality or net zero or whatever frame we want to use through electrification, through renewable, through biofuels, we still have to deal with all this excess carbon that we have in our atmosphere. Over the last 800,000 years, we've got record carbon levels. We're north of 400 parts per million, which is quite concentrated. So there's a lot to do going forward, having companies work both on a carbon credit, carbon offset, carbon origination program, like the companies on this panel, like Agnico Eagle. That's excellent. And that's what you want to do. And you want to do that going forward indefinitely. You also want to transition at the same time. So what you need to see is both happening, and everybody on this panel is saying the same thing. And it's good to see that alignment, because that's what the sector is doing. And that's where the sector has to go going forward. So exciting times. We all have a very busy 30 years ahead of us.
Good. So you guys might. I don't think I'll make it that far. Thank you, everyone, for joining us today. That was a really great discussion. Thank you for allowing me to throw some dumb questions at you, which just get asked a lot and perhaps need dealing with. And and it's good for us to sort of understand the way that you view the path forward and why that's good for everyone. So look, folks, people listening and watching this, please go have a look at Troilus Gold, Green Star Royalties, and Karora Resources, some of the companies I think are doing this the right way.